Hi friends, welcome to Saral Trader. We will do the weekly review of our futures setups. So this is a small cap index. Now on the small cap index, we traded this signal earlier and we got a good follow through. We made some profit and then a small cap index gave us another signal, uh, this signal that we traded. Now if you see, the markets went on upside, and then as market opened yesterday, a day before yesterday, there was a sharp dump. Now this dump went exactly to a key pivot here. This is 50 simple SMA, 60 simple SMA, and not 50. And with this dump, what the operators were trying to do was to take out all people who probably entered somewhere here, and had put, or maybe at this levels where they have put their stops somewhere below these candles. Now, all a lot of people would have got stopped out here, and we then the market again continued overnight, and you got a very big breakout, which was actually I told that there will be a new attempt to make a new all-time high. So previous high was 2510. We made 2515, and then market couldn't sustain further and came down. So we exited some of our position at around 272 levels, and then the remaining position at 91. Now market went up, that's fine, but we made our money. So this was a successful, we got two successful exits in the small cap index. Now this price pattern is little bearish. We may make another move towards down. Maybe there is a possibility that we come down and then markets move up. But my view is that markets can retrace. The small cap index can retrace to 2470 to 2450 levels. And then there can be a possible up move on this. But we are in a bullish setup now, both on weekly, monthly, and daily charts. This rally, which started in April, if you see, this rally which started in April, somewhere here, has has not made any. There was one touch. There were two touches of 63-day moving average, but this has been incessantly going up. Now, from April to October, we are already in 6 months. This is a very big bullish cycle that is going on. So as long as we are trading above the 63-day moving average, we will only look for buying opportunities in the small cap index and generally any index. If you look at Nasdaq we traded. We had a signal. One time we entered somewhere earlier here and we exited around 25,000 levels. And then when the retracement happened, we again took a trade. uh, we took that trade on a different system. So, this somewhere around our entry was around 700 or 800 levels, 811 levels. And we got this entire move up. Now we exited at our target of 25,100, but then we got a little bit more follow through, but then the selling has come. So what I am seeing is that there is some lethargy in markets now moving up. They are moving, and different. This is what happens when the VIX really comes down. So we have to be very careful, and we have to hedge very carefully with ETFs if we are trading indexes, because markets are at all-time highs, new all-time highs, and there can be sharp moves down to shake out smaller hands before the market goes up, right? So we have to be very careful, always be hedged, and not to take any adventures, undue adventures, like not taking a stop or not taking hedges. So always be hedged. Now let's see this crude oil. Now crude oil was very synchronized way. Crude oil was moving for last 4 weeks or so. So we had this range on the lower side, 6150 to 61, and on the upper side it was trading to 66. So one move, one rally, this was one rally, then there was another attempt, then again markets fizzled out completely, another rally, then again, so this was a zigzag pattern. And this zigzag pattern has been broken, where the 61 level support is kind of broken. and we went down to 60. So 61, 61.50 to 60. Now again there was an attempt. I had taken one crude oil position and I sold. I was able to sell it exactly at the high swing highs, but then again market fizzled out, and now we are trading below this previous support, which has now become a very big resistance here. So in this kind of scenarios, it is possible that market trades sideways for some time, and then either it will break down. If it breaks down 59 to 58 will be very strong support again, where you can expect sharp moves up. So this is the level where we will add to our position or we will roll over our hedges. So we are holding on to the crude oil position. We'll see gold. Gold has completely, we have missed the entire rally in gold. I tried trading it, but it is so extended that it's very difficult to kind of trade it. So we are moving, but now gold is not stopping. It is at 3912. Most probably it's going to 4000. We have not taken any position. We'll see if there is a pullback. Market comes down. I actually tried shorting it, and I did get some follow through, but then I was roasted and I had to exit when this came in. So it's in a very strong bullish move. Let's not try to short it. We'll just wait for an opportunity to see, and then we'll go. Wheat. So wheat now is doing absolutely nothing. Wheat is we I have a long position, but wheat is not doing anything, so it's kind of waste. We have a lot of time left, so I'll see how to adjust that position, or I'll just take a loss and move out. So Nasdaq and S&P 500 futures. Now S&P 500 futures, if you see, very similar structure on S&P 500 futures. So we had this kind of a correction, then there was a move, the signal, there was no follow through, it fizzled out and it reversed, but because we were hedged, we were able to hold it, and now it's met the target, and there is a dejection here. Similar price patterns you will see in all the index futures, and markets are fizzling out. Let's see if it goes to 6725 or even lower 6696. These are the levels we will again be interested in trading them. Now a lot of people have asked, why you give most of your trades in RTY. So see, RTY is the small cap index, and it is an index which has very good range. So if you look at the range currently, the current range of RTY is 37 points, which is around 1.5%. So it gives a very good range to trade, and the contract size is pretty small. So M2k contract is 5, lot size of 5. So you get a $12,000 contract versus MES, which is a $35,000 contract. So it gives you ability to play small with futures. So I generally prefer to do that. Nasdaq, if you see, Nasdaq futures, micro future currently has a size of around 50,000. It's basically 2. So 25,000 it is trading. So if you do one micro of Nasdaq, it is basically 25. It's basically 50,000. So it's very large contract. So basically that's why we trade primarily RTY more, because indexes will generally move in sync. So if I am giving a RTY signal, for some reason you want to trade ES or NQ, you can do that as well. Most of the patterns in a small cap index or all the indexes is just minor differences sometimes. So this is it. If you want to learn how to trade futures with hedges, you can join our futures channel. I'll give the link in the description of the video. And if you have any other questions on how to trade, you can reach out to me. Thanks. Bye-bye.